I've been in business and investing for decades, and one thing I've learned is simple. Cash is supposed to be your safe place. You park it, you feel secure, and you know you can act fast when opportunities appear. That's why people naturally rush to cash when markets get uncertain. When the headlines get loud, when the market seems unpredictable, it feels comfortable to hold on to something tangible, something you can touch, something you can count. But here's the problem many people don't see. Cash isn't automatically safe anymore. Holding it blindly can actually hurt you over time, slowly, quietly, without making much noise. I've seen this happen to smart people, disciplined people, and experienced investors who thought they were playing it safe. And it's why I want to talk to you about how I think about cash today, why it's losing its traditional safety role, and what I actually do instead. This isn't fear-mongering, and it isn't a prediction. It's about understanding the reality of money in a changing environment and how to respond with clarity. For decades, the environment was simple. Interest rates were extremely low. Cash didn't earn much, but inflation was also modest. You could hold it without losing value, and while you weren't growing wealth significantly, you weren't losing it either. It was neutral. That environment created habits. Keep cash, feel safe, and wait for the right opportunity. But those habits don't work the same way today. Rates have risen. Inflation surged. Prices didn't retreat. They stayed stubbornly high. And many people assume that higher rates automatically make cash safe again. That assumption is wrong, and it can be costly. Safety isn't just about what the bank pays in interest. Safety is about what your money can actually buy over time. And right now, cash often loses purchasing power faster than interest accumulates. It's not dramatic. You won't notice it in a single month, but over months and years, it quietly erodes wealth. That's why I say cash has lost part of its traditional safety role. It doesn't mean cash is useless. It means the rules have changed, and if you don't recognize it, your decisions may suffer. I think about cash as a tool, not a destination. Its biggest advantage is flexibility. Cash gives you options. It allows you to move quickly. It lets you take advantage of opportunities. It covers emergencies. That's invaluable. But cash also has limitations. It doesn't produce income. It doesn't grow. And when inflation outpaces what your cash earns, it quietly loses value. I like to think of cash like ice in a warm room. At first, it looks solid, reliable, safe. But over time, it melts. Inflation is the warmth. It slowly diminishes the real value of the cash you're holding, even if your balance looks the same on paper. Then there's opportunity cost. When you hold cash, you're avoiding volatility, yes, but you're also missing out on growth. Businesses that generate income, assets that adjust their pricing over time, opportunities that increase in value while cash sits idle. This doesn't mean cash is bad. It means it's a temporary parking spot, a tool to use intentionally, not a permanent home. And behavior matters. People tend to hoard cash, waiting for perfect clarity. Certainty rarely arrives. Meanwhile, purchasing power quietly diminishes. That's the mechanism I watch every day. It's math and incentives, not panic. I've built my career around understanding risk and reward. Cash losing its safety role isn't a reason to panic. It's a prompt to think differently. I follow 3 principles. First, your capital should either produce income or preserve purchasing power. If it doesn't do either, it's failing. Second, risk isn't just about volatility. It's also about inaction. Doing nothing when conditions change can be just as risky as making the wrong move. Third, timing isn't everything. Discipline is. You don't need to guess the perfect moment. You need to align your decisions with reality as it unfolds. When I talk about cash losing its safety role, I'm not saying abandon it. I'm saying treat it intentionally. Think about what it does, what it doesn't do, and how it fits into your overall strategy. That's how I manage my money every day. Let me give you an example from my own experience. A few years ago, I kept a large portion of cash because I thought the market was too volatile. Everyone was nervous. Headlines screamed uncertainty. I thought I was safe. But I noticed that my cash was actually losing value in real terms. Inflation was quietly eroding it. At the same time, other opportunities, businesses, structured deals, investments with pricing power, were generating returns that far outpaced the cash I held. It was a wake-up call. Holding cash wasn't helping me preserve wealth. It was limiting my options. That's when I realized the role of cash needed to be redefined in my strategy. It wasn't about abandoning safety. It was about using cash as a tool, a flexible instrument, not a permanent refuge. In practice, here's what I do. First, I stop hoarding cash automatically. I ask myself, how long do I realistically need this money to stay idle? Short-term flexibility is critical. Long-term stagnation is dangerous. Second, I evaluate other assets differently. Not all non-cash assets are risky by default. I ask, does this asset adjust for inflation? Does it generate income? Does it have pricing power? Risk is contextual, not binary. Third, I avoid waiting for perfect clarity. Most people wait too long. By the time they act, opportunities are gone. I focus on thoughtful, gradual adjustments that match evolving market conditions. None of this is about panic or making reckless moves. It's about awareness, discipline, and intentionality. Cash still matters, but it's no longer an automatic safety net. That's the reality. Accept it, understand it, and plan accordingly. Let me be clear. Cash is not worthless. Banks aren't collapsing. Holding it isn't a mistake. What's changed is the outdated assumption that cash alone will protect you indefinitely. That assumption quietly erodes wealth if you ignore it. The real mistake? Overreacting to headlines, following old rules blindly. That's what I see most people do, and it's why so many investors feel anxious even when markets are fine. I focus on intentional, informed decisions. I balance flexibility, opportunity, and preservation, calmly, rationally, without fear. That's what separates thoughtful investors from those who react emotionally. That's what I do every day. At the start, I described cash as the quiet room you retreat to when the world is noisy. That room hasn't disappeared, but the temperature has changed. Cash is still valuable, but it works best when I'm intentional. I treat it as a tool, not a permanent shelter. Understanding that distinction has changed how I manage risk, invest in opportunities, and preserve wealth. It's not about panic. It's about clarity, discipline, adaptability. Investors who understand this aren't running from fear. They're staying calm, watching carefully, making smart, informed decisions. That's how I manage my money. That's how I protect capital. That's how I stay ahead, by understanding when cash is safe, when it isn't, and how to use it to my advantage. If this perspective on cash makes sense to you, I'd like to hear your thoughts. How do you think about holding cash in today's environment? Drop a comment and share your approach. I read them all. And if you found this helpful, consider subscribing so you don't miss the next breakdown on how to make your money work smarter, not harder.